As of the market close on Friday, January 9, 2026 at 4 p.m. EST, BigBear.ai Holdings Inc., trading as BBAI on the New York Stock Exchange, finished the session at $6.20 per share. This represents a minor gain of $0.03 or approximately 0.49% during regular trading hours. In the after-hours session, we saw a slight continued uptick of 0.32%, bringing the price to $6.22 by the time the electronic tape stopped rolling at 8 p.m. Since today is Sunday, January 11, 2026, the markets are currently closed, and these figures reflect the most recent data as we prepare for the opening bell of the second full week of the year. If you have been tracking the volatility of AI-related names on your Robinhood app or monitoring the broader tech sector through your Fidelity trading platform, you know that BBAI has been a focal point for those looking for smaller, high-upside players in the defense and national security space. The immediate expectation for a company like BigBear.ai is that it simply follows the momentum of the big-name chip makers like NVIDIA stock. Many retail traders looking for quick hits on the Robinhood app assume that if the leaders are up, the smaller software layers should follow. The reality, however, is that BBAI is currently navigating a fundamental pivot that is much more about operational discipline and government contract timing than it is about broad market hype. Just as investors were starting to question the company's ability to maintain its growth after a choppy 2025, they dropped a significant announcement on January 9th, a partnership with the Kraft Group and the New England Patriots to drive digital transformation and operational efficiencies. This isn't just a sports deal, it is a signal that their enterprise AI solutions, traditionally locked away in the secure vaults of the Department of Defense, are starting to find a repeatable, scalable home in the commercial world. This is the curiosity loop that separates the casual observer from the deep-value hunter. How does a company built for national security translate that complexity into commercial profitability? If you were using tools like Interactive Brokers or checking your individual brokerage account, the trading volume on Friday was particularly telling. We saw over 71 million shares change hands, which is a massive spike compared to the typical activity levels. This surge in volume suggests a heavy battle between those who see the recent $250 million acquisition of Ask Sage as a masterstroke and those who are focused on the 21% short interest currently weighing on the float. For the self-investing community, this is the classic tension between a cleaned-up balance sheet and the lumpy nature of government revenue. While big tech names like Apple stock or Tesla stock trade on consumer sentiment and predictable upgrade cycles, BBAI lives and dies by the federal budget and the speed of contract conversions. When we look at the broader context of online investing, the common ground for BBAI is often its comparison to Palantir. The general belief is that BBAI is the little brother in the space, fighting for the scraps left over from the massive contracts won by the larger players. But the contrarian reality is that BBAI has carved out a very specific niche in edge AI, bringing decision intelligence to the actual battlefield or the factory floor where connectivity is limited and latency is a deal breaker. By focusing on edge infrastructure, they aren't just competing with software, they're building the plumbing for the next decade of autonomous operations. This is why their recent debt reduction was such a big deal. They eliminated about $125 million of high-interest convertible debt, essentially de-risking the balance sheet, just as the defense budget for 2026 is expected to hit nearly $12 billion for AI initiatives. For those of you managing a Schwab Intelligent portfolio or looking at Fidelity investments for long-term stability, BBAI might feel like a wild card. But if you look at their acquisition of Pangiam and now Ask Sage, you see a company that is aggressively buying market share in biometric security and generative AI workflows. Ask Sage alone adds nearly 16,000 government teams across 27 agencies to their roster. This is the land and expand strategy in action. The expectation was that BBAI would struggle to find new revenue streams outside of its core contracts. The reality is that they've built a platform that now touches everything from airport traveler identification to shipbuilding software for the U.S. Navy. I want to pause here and ask for your take on this strategy. Comment below with how many shares of BBAI you currently hold, or let me know if you think the commercial pivot with the New England Patriots is the right move for a company that started in the intelligence community. I'm curious if you're holding this in your SoFi active investing account or if you're waiting for more clarity on their 2026 revenue guidance. If you were using the Fidelity mobile app to track sector rotation, you've probably noticed that while the high flyers of the previous year are consolidating, there is a lot of smart money moving into the application layer of AI. This is where BBAI lives. They take the raw power of something like NVIDIA stock and turn it into a usable tool for a soldier in the field or a logistics manager in a global warehouse. Their Conductor OS and Veriscan products are moving from pilot programs into general availability. This transition is critical because it shifts the company away from one-off consulting fees towards higher-margin, recurring software revenue. The expectation is that this will eventually lead to EBITDA positivity, a milestone the company has been chasing for several years. For the crowd focused on self-investing and using platforms like interactive brokers trading, the technical setup is equally fascinating. The stock hit a 52-week high of $10.36 before pulling back into the $6 range. On Friday, it held the $6.15 support level despite a lot of noise in the broader indices. The fact that the stock managed to stay green on a day when many other growth names were under pressure is a sign of internal strength. With a market cap now sitting around $2.7 billion, the valuation is high at 17 times sales, but if they hit the high end of their revenue projections, which target over $300 million by 2027, the current price could look like a bargain in hindsight. This is the gamble that retail traders on the Robinhood app are making, that the revenue doubling is a matter of when, not if. Let's look at the business model in more detail for those who are used to the automated rebalancing of an intelligent portfolio or Fidelity mutual funds. BigBear.ai is fundamentally a decision intelligence company. They use AI to analyze massive, disparate data streams to help people make better choices in real time. In a national security context, that might mean predicting a supply chain disruption or identifying a threat at a border crossing. In a commercial context, like the Kraft Group partnership, it means optimizing massive stadium operations or managing the complex logistics of a professional sports franchise. The beauty of this model is that once the software is integrated into a customer's workflow, the switching costs are incredibly high. It becomes the operating system for the mission. If you are doing your own online investment research or looking for investment help on various investing sites, you have to keep an eye on the lumpy revenue problem. Government contracts are notorious for delays. A budget shutdown or a shift in administrative priorities can push millions of dollars in revenue from one quarter to the next. This is exactly what happened in 2025, which caused the stock to slump as the company had to revise its guidance. The reality is that these aren't lost contracts, they're just delayed. But the market hates uncertainty, and that is why you see the stock trading with a significant volatility premium. If you're managing an individual brokerage account, you have to have the stomach for these swings. Institutional activity is picking up. We've seen major positions held by firms like Vanguard and BlackRock, with over 360 institutional holders now in the name. When names like Geode Capital and Charles Schwab Investment Management are increasing their stakes, it tells you that the institutional side is looking past the quarterly revenue volatility and focusing on the total addressable market. The military AI sector alone is expected to reach nearly $39 billion by 2028. BBAI doesn't need to win the whole market to be a massive success. They just need to maintain their prime contractor status on a few key program of record. For the active traders using the Interactive Brokers platform, the short interest is a key piece of the puzzle. At 21% of the float, any positive surprise in an earnings report or a major contract win from the Air Force could trigger a significant squeeze. We saw a hint of this on January 6th when the stock surged nearly 10% on a heavy volume day. The expectation is that the shorts are right and the company won't reach profitability. The reality is that the debt reduction and the Ask Sage integration have drastically improved the company's financial health indicators. According to some analytics, they are now in the green zone for financial health for the first time in their history as a public company. As we look toward the future outlook for 2026, the catalysts are lining up. We have the integration of Ask Sage and the expected One Big Beautiful Bill funding for national